Do you have an insurance or not? You may not have an insurance, that's the problem in itself. But even a large set of people who do have insurance, the protection gap is still very, very large. Some people say it's as high as 70%, which means that ideally, if you need to have 10 lakh rupees of cover, all that you have is a 3 lakh rupees cover.
You also worked with major brands like Spinny, Hero, TVS, HDFC Life. Why do you think they chose Ensuredit?
I always say in the industry that we are in, the only tech stack, the only product that works is ours.
Okay. A lot of people will be listening to this claim.
No, and I'm happy to stick my neck out on that.
We were talking to your real users, the distributors who are using their product and getting their feedback. Because in the end, it doesn't matter what claims you make. It is about how you're being perceived by the people who are paying you.
Yeah.
That's what makes the difference.
So we recently concluded a deal with one of the largest insurance companies globally.
Congratulations.
Thank you very much.
You can disclose the name?
Well. I think that it's important for founders to have the emotional maturity to say that if you and I don't agree on something, we're going to have a disagreement. We're going to have a violent disagreement. But once that is over, you remember that both of you are fighting for the same thing. I think way back in 2004-05, insurance economy in China and India was pretty much the same.
Oh, wow.
In the next 5 years, we believe that we will be the largest insurance infrastructure company in the world. The plan is...
As an investor, I could have not heard any better words. Hello everyone, welcome to Beyond the Pitch. Today we are exploring a space that impacts millions but has remained painfully outdated: insurance. And surprisingly, one of the sectors which, while it can truly benefit from the technology, but the technology has really stayed away. We will discuss a lot about this sector today. And our guest is someone who is leading that change. He's the founder of Ensuredit, a company that's on a mission to revolutionize how insurance is bought, sold, and distributed. By leveraging technology, automation, and embedded insurance solutions, Ensuredit is making insurance more accessible, efficient, scalable, and for insurers, agents, and businesses alike. Amit, welcome to Beyond the Pitch. How are you?
I'm doing well. Thank you very much for having me here.
No, pleasure is all ours. So, Amit, before I start, our audience will today include investors, would-be investors, founders and would-be founders, and everybody in between. So, let's start by telling them what is Ensuredit.
Simply put, we are the technology rails that makes insurance accessible, makes it work, makes it relevant in today's time and digital age. It basically translates insurance, which has typically been, like you rightly said, has as an industry stayed away from, or has stayed not by design, but per force away from technology. We bring that to the world. We essentially are responsible for translating an analog business model and an analog thought process models that exist in the industry into more relevant, what's available today, what's relevant today, and how it's going to be in the future as an industry.
So just to break it down, I talked about the three key stakeholders: the insurers, the insured, and the distributors. Whose life are you touching the most?
So we fundamentally are touching the life of the end consumer and the insurance distributors in the middle. Insurance as an industry fundamentally has been a feet on street industry, and that's not only for India. It's true for practically every market globally as far as insurance is concerned. It's a lot more complicated product, so it needs a human in the loop kind of a mechanism to explain a product, to kind of tell about what the risks are and how those risks needs to be managed. So we see it as essentially more focused towards end consumers. How do we make it easy for them to understand the product? How do we make it easy for the intermediaries to kind of get access to products, get access to more insurance companies that they work for, help them kind of run what we call insurance in a box form.
Got it. So let's start from the beginning. Let's talk a little bit about your growing up years. Who was the major influence in your life? And did you really see yourself as somebody starting your own business when you were a kid?
Not by any stretch of imagination. I mean, I was born in Kashmir. My father and family moved to Jammu in 1983. So I was pretty much brought up in Jammu. So though I'm by birth a Kashmiri, home has always been Jammu. Even today, 45 years later, home is still Jammu. So most of the schooling happened there, engineering happened out of NIT Jalandhar, MBA happened out of MBI at Gurgaon. But yeah, it's essentially I'm at heart still a J&K guy, um, and the way the world operated out there, and I think it's true for a lot of other folks as well. Typical middle class folks, the idea was you study well, you try to get into a great job and make something out of yourself. Yeah, right. I'll say right up till about 2015-16, I hadn't given entrepreneurship any thought. I did have a very small entrepreneur stint in 2001-2. After my engineering, went to a tech company in Bangalore, worked there for about a year and a half. Came out of there and decided that we're going to set up an IT services firm with a couple of my other friends. Um, if we knew any better, that was a time when .com was busting. It is not something that we should even have been thinking, but yeah, that's when you're young and you're still, you don't want to figure out everything, but you want to just do a bunch of things. But yeah, I mean, not seriously right up till about 2015-16 did I ever give entrepreneurship a good thought. It was only in 2018 that I practically made up my mind that it's about time.
But why insurance? Because there are some very interesting stats. The per capita insurance premium in India is just $91, whereas the global average is $874. Yet only 3 out of 10 Indians have adequate insurance coverage. So India continues to be a highly underpenetrated market when it comes to insurance. Why do you think it is? And as you were turning entrepreneur, why do you think, what made you solve this particular problem?
There are two interesting reasons for this. One is my co-founder Rohit. Rohit and I are childhood friends. Pretty much similar backgrounds. He's a Kashmiri. He was in Jammu post when migrations happened. We've been in the same school, so we knew each other for about 80% of our lives. And Rohit was in New York at that time. He used to lead BFSI practice for PricewaterhouseCoopers, and he was there for about 7-8 years. And because we are best of friends, we used to kind of keep on talking on and off. And when we discussed entrepreneurship or what are the areas that we wanted to get into, one key thing that emerged was what are the areas wherein we can complement each other and get into those businesses. So though he came out and out from a BFSI consulting, tech consulting side, and I came essentially from a more tech commercial side of having led consumer electronics part of it, we realized that there are certain things that make sense for us to do together. So what are the areas or what are the industries where we believed that the market size was very, very large? It was going to grow blindfold, no problem for the next 20, 30 years. There was hardly any technology interventions there. There was elements that Rohit could bring in, having worked with global behemoths in the banking and financial sector, especially on the technology consulting side and what can be done, and my work that we had done on distribution side, right? So as we kind of brought this all together, we realized that it's insurance is probably the sector. Now, we obviously, neither Rohit nor me, and more importantly me, we didn't know much about insurance, right? So we spent enough time looking at what that industry was, what were some of the core problems. So when we actually decided in the early days, we decided that we could become a brokerage and build our own tech and then do so on and so forth. At some stage, we realized that that's not a large enough business to do, considering that some of the businesses that I had led earlier on were at a scale of magnitude much, much, much larger. I mean, some of the businesses that I led at that time are even today, 8 years down the line, larger than some of the larger insurance companies in the country. So the intent was that as we start doing this, we should get into something wherein even a meaningful 2-3% is very, very large. So yeah, we decided that insurance is going to be that sector. It checked all the boxes that we were looking at. And second was exactly what you said. I mean, despite the fact that India, and people talk essentially about penetration rates in the country, which are still very low. Adoption has been relatively lower in the country. You look at markets like US, wherein you're looking at penetration rates upwards about 6.5-7% now, and we are still stuck in sub 4%. It's 2 or 3 major things. One, the cost of distribution is very, very high, and the marginal cost of distribution expansion in the industry is extremely high. So how do nobody's in a way incentivized to go to a lot more markets even within the country. So if you see, I think about 90% plus of distribution in general insurance as well as life insurance is fundamentally concentrated in your tier 1, sub tier 2 markets. Other markets don't even have access, which practically means that if I was staying in a tier 3 or a tier 4 market, even if I'm interested in buying a good product, there may be no one who's out there willing to sell it. So how do you solve for distribution? How do you reduce the cost of distribution expansion for this market? The second is, by and large, most of the products that exist in the industry, they're almost the same. Because the data pipelines that are coming in are the same. The risk pool that everyone is looking at from an underwriting perspective is the same. So when you increase the distribution footprint, you're also getting a lot more risk pool bringing in, and you have a larger risk pool coming in. It ensures that you have a lot more data to create sub-segments, micro-segments. You can create fundamentally important products that are relevant to the end consumers. I think if you look at those two things, those are very, very important. Over a period of time, obviously embedded insurance has taken a larger traction as well. So, and again, I mean, as outsiders, sometimes we look at insurance as, oh, I have to do a health insurance, I have to do life insurance, I have to insure my car. But there are so many other lines of insurance, right? You may be 2 people or 3 people or 4 people at home, but you have at least 10, 15, 20 assets at home.
Absolutely.
All worth some kind of insurance. And especially if you look at that from the perspective of middle class, lower middle class, who essentially work really hard to make what they make on an everyday basis. And then if they go ahead and use that disposable income, let's say to buy a refrigerator or to buy an expensive television, how do you make sure that asset is protected? So those are some of the lines.
In fact, even house insurance, which very few take.
I'm sorry?
In fact, even house insurance, which very few take.
Absolutely. And these are some of the important ones that need to happen. So to your point, why is the average selling price or average numbers as low as like $91? It's because by and large, everyone has stayed around the same product lines. The protection gap. So one is, do you have an insurance or not? So you may not have an insurance, and that's a problem in itself. But even a large set of people who do have insurance, the protection gap is still very, very large. And I think, for example, in health, I think there are different numbers, but some people say it's as high as 70%, which means that ideally, if you need to have 10 lakh rupees of cover to kind of take care of you or your family, all that you have is a 3 lakh rupees cover. So, there have been these pricing issues, there is the network issues, the ecosystem is not really well stitched together. And what that essentially means is there is much lower incentivization as a pull product. And as I said, the cost of distribution in any case is high. I can anecdotally tell you an interesting thing. I think way back in 2004-05, if I'm getting the years right, insurance economy in China and India was pretty much the same.
Oh wow.
Europe, we had about 14 odd lakh feet on street. China had, I think, about less than that, about 9-10 lakh.
So you mean the distribution land?
Yes.
Okay.
Last that I have heard, I think India is about, organizedly about 20-21 lakh feet on street. I recently was reading somewhere, they're calling out that China could be as high as about 90 lakh people.
So, but you think that insurance still is a product which is sold feet on street?
Insurance is a product that needs technology interventions at multiple places in the value chain. The human in the loop is an conversion metric that a lot of people still need to do.
Okay.
It will, in my opinion, be a system that needs, it's a cliche, but some kind of a digitalization is important for this. I think that may change over the next few years as, for example, the newer AI systems AI systems.
The demographic that is buying insurance also changes, and they become more used to buying things online.
Absolutely.
You made a very interesting point about under-penetration of insurance, especially in tier 3, tier 4. So is there any anecdotal data or any reference you have that by adopting Ensuredit, what kind of difference you have been able to make to the tier 3, tier 4 cities?
Yeah. we have a client who, when about 3 years back, we were talking to him, Bombay based, and has been very very keen because he, as an insurance agent, long time back, he had worked in Bengal, West Bengal,
Okay.
right? And he said, I know people there. I think I know how insurance is bought and sold there. I want to have I want to set up my business out there. But how do I do it? I will need to set up an office. There are regulatory compliances around having a physical place. And then I will need to kind of have a much larger team that manages the other side of the team. And there's the whole 9 yards. And when he came on board our platform, he realized that he didn't practically need an office out there. He can manage his entire sales force, including his team leads, his entire hiring of those folks, the training of those folks, making sure they're getting the right kind of insurance companies to work with, right kind of products that they need to sell, and the commissions that they were looking at, all being done at one place. He could now do the entire MIS of those things. He could do the commissions, the reconciliation, in the entire gamut of activities on the platform. What does that do? The fixed cost comes and order of magnitude lower.
Right.
At least a 10x lower. Now, he may still want to set up an office at some stage, but as a starting point, when you're going into market, when you're expanding into markets, when you don't have the capacity to do fixed costs, it gives him an opportunity, or any other partners an opportunity to kind of do that. And he actually did that. And not only in one market in Bengal, he ended up going to some markets in and around Mangalore, some in outskirts of or smaller cities in Tamil Nadu. Probably now operates in at least 5-6 different states on the back of the platform that we provided him. So that was important. That was very fulfilling in a way.
No, this is excellent. And from what I gather, you also worked with major brands like Spinny, Hero, TVS, HDFC Live, right? These are not easy companies or easy logos to crack.
Mm-hmm.
Why do you think they chose Ensuredit?
I always say, in the industry that we are in, the only tech stack, the only product that works is ours.
Okay.
And we,
a lot of people will be listening to this claim.
No, and I'm happy to stick my neck out on that. See, when we started, there was a lot of interest in this as an area. There's a lot of companies that came in. A lot of them started saying with tech, ended up becoming intermediaries themselves, and which is fine. Our viewpoint has always been that we want to be a tech infrastructure company to that extent. Right? We want to be intelligent as a tech infrastructure company, now essentially an AI-driven tech intelligence. But we would never be an insurance intermediary. And what that has led to is our focus has never been on selling insurance. Our focus has always been on building the platform on how this works, how well does this work, how do we make sure that on a multi-tenancy model that we can broadly distribute it, and by doing that, how do we keep it accessible, even at a cost level, for a lot of our partners. So focus on the technology, how it works, how it helps solve the problem, keep the pricing of that technology low, and so that it becomes accessible to, there are about 2,500 distributors in the country, institutionally, right? And I'm saying licensed ones. If you look at unlicensed ones who are doing group insurance, probably another 1,000 or more at least.
Absolutely.
So how do we make sure that we are not asking people to shell out, a couple of crores at least? So and that's one thing that has helped us kind of do this. So yeah, I think it's the focus that we have led on technology and making sure that it's a platform that works well. So when clients or potential clients approach us, they've already done due diligence with multiple partners, right? And when they see the difference in terms of what Ensuredit's platform does, I think it's remarkable. I'll also give you examples from international markets. So we recently concluded a deal with one of the largest insurance companies globally.
Congratulations.
Thank you very much.
You can disclose the name?
Will. Because I haven't still asked them if I could.
Got it.
But
this is what you were telling me about a couple of months earlier.
Yes. A remarkable deal. The due diligence on our systems and our products went on for about 3 months. I don't think that much of due diligence happened on us when we got investment. as much as they have done due diligence on us in terms of looking at product, and rightfully so, because it's easy to say that you have a technology platform that works. And when one of the world's largest insurance companies looks at it, they have already built tons of technology of that nature globally. And they looked at us and they were actually flabbergasted with how well a system has been built, how simple is it, and how scalable is it. So we're now talking about, can we do it in one market, can we do it in multiple markets? And it's not only that. I mean, even if you look at Cover Genius, which is an investor for us, world's largest embedded insurance company. They had looked at a ton of companies, did a ton of due diligence, and then decided to invest with us. It's a lot of that is on the back of how focused and how simply we look at how our technology stack is solving the problems for the client segments.
Absolutely, and that is something which stood out in our due diligence also, where we were talking to your real users, the distributors who are using their product and getting their feedback. Because in the end, it doesn't matter what claims you make. It is about how you're being perceived by the people who are paying you.
Yeah, absolutely.
That's what makes the difference. Now, another thing which I, as an investor, always try, may not always succeed, but always try, is invest in businesses which are backed by government, which have the support of the government to promote. So, for example, insurance, there is a big government thing like insurance for all by 2047, when we celebrate our 100 years of independence. How does this opportunity that is going to come ahead of you in the next 20 years, how excited are you, and how does it support the growth of your business?
No, absolutely. I mean, very, very excited. I mean, just the sheer size of our market is a huge play by itself. Government's enabling mechanisms, and as you know, there is already now a bill which kind of even further, will create some ease of business. We don't know all the contours of what that bill is gonna bring out, but yeah, I think there's quite a bit that's gonna happen. I think it's gonna help companies like us even move up the value chain. It's going to help companies like us to become more mainstreamed and work with a larger gamut of people, as it opens up more channels of distribution as well. And it's not only distribution from that perspective, it's about how you can co-create products, how you look at data and data pipelines, how you can make ease of selling. So I think government's push on that side, and it's especially the policy side of it, making it open, making it more accessible. FDI rules have recently changed. You will see a lot more companies wanting to come to India, and I think you can already see some seeds sowing around that happening. So no, I think it's a huge opportunity. I mean, when we started this in 2019, we used to call out a TAM of about $90 billion. Here, sitting 6 years down the line, we're calling out a TAM of about $155, $160 billion. I'm convinced that by 2030, we're looking at least about $300 billion.
And how are you defining your TAM?
So essentially, it is the premium that's there in the industry. Then, if you start coming down the SAM levels, you're looking at commissions, you're looking at product partaking. But the more important thing is companies like us at some stage will have an opportunity to go product route as well. Whether you're looking at MGAs or product curation, or working with actuarial firms, or working with reinsurance firms. We're already kind of working with some RI firms as well, in terms of, because now we know exactly what is being sold, where is it being sold. I sometimes very boldly kind of say this, I can tell you at a pin code level who is selling what.
Correct.
Right. So our ability to kind of, for example, help out, in product creation comes into play. So I think over a period of time, our margin brackets will increase, because our participation in the product or the vertical value chain will increase as well.
Excellent. Let's talk a little bit about fundraising. There will be a lot of entrepreneurs who are yet to fundraise. You had a corporate career before. You don't come from a family of business per se. How was your experience? How did you prepare yourself for fundraising? Some key challenges you came across, any advice you will have for the founders who are or want to get into the fundraising for startups?
I think especially people like me who come from corporate side of the world, especially if you've done reasonably well, there is a huge plus and minus to it. The plus is that your ability to kind of understand certain businesses at scale, articulate them, and people taking you seriously exists. People are happy to kind of give you a little bit more time compared to, let's say, if there was somebody else who didn't have that kind of a career or that much of an experience. I think the downside is that as a person coming from that background, the investing world and how investors look at businesses is chalk and cheese different from how corporates see it. I remember this when I did my financial model for the first time. I put in numbers that weren't like really large, and I was talking to one of the investors at very, very early days, and he said, "Why are your numbers so small?" I said, I think we can do a lot more, but I want to put in the numbers that I can guarantee you that we can do. He said, that's not how it works, because I want to see the entire spread of what is possible, right? Now that's such an ingrained thing. In corporate side of it, you'll always undercall a number. Out here, you want to show the full spread of potential. I think it is something as nuanced as that, especially people who come from background, of having worked earlier, need to understand. We also raised our seed round at the peak of COVID. So for us, there was a much larger tizzy happening at that time. And one of the things that I realized at that time is you got to be extremely clear. If you cannot answer every question in a yes and no, I think you have a problem. You should have a capacity to explain that answer later on, which is fine. But if somebody says, does the product work for ABC? Don't give out details. Yes, no. Can you do this? Yes, no. How? Then you get into the house of it. But I think sometimes what happens is because I always say, for an entrepreneur, his company, his products are like kids, right?
Yes.
And nobody thinks that their kid is ugly. So you sometimes get a little bit too enamored by what you're doing, losing the sight of what a logical conversation is, and also getting into the shoes of an investor. Why does he or she want to do it, and therefore be in a position to explain it well to them. I think those are some of the things that we didn't know that well, right? We thought very corporatively at that time. But for a principle is, I think, very simple. Understand your product and your market as clearly as possible. Understand your competition. I think a lot of people tend to believe that, I am the first one, I am the most innovative one. Maybe it's not important. Maybe it's important that there are other people who have successfully done that across the globe. Look at the scalability of your product and solutions and how it not only works in your country but can be scaled out. I mean, today we are so much more proud because we don't only have clients in India, we have clients in Middle East. We now have a client in Europe. We are looking at expanding a lot more. We have clients because of our strategic partnerships, hopefully now in US as well. But look at that. So you need to look at your competition. Don't say, no, we are the only ones. Nobody's competing with us. I don't think that works well.
I'm a big fan of where there is honey, there will be bees. I get very nervous when nobody else is doing it.
Yep.
And I'm like, why is nobody doing it? Is the problem not big enough, or the solution doesn't work? Doesn't mean that you don't reward first movers. There is a reward for first movers. Nobody is doing it, but I totally believe you should know your competition. You should not underestimate your competition. Journey of a founder. We treat ourselves as founders as well, right? We started in 2019 as well, except we are in the business of funding startups. What people don't realize is journey of a founder can be lonely, is what they say. How important was it for you to have your best friend as your co-founder? Because also they say never mix friendship with business, don't do business with friends, and there are so many of the other things that people say. But you chose to work with somebody you knew since childhood.
Yeah, and that's because people have not seen Rohit and me fighting. No, I think I cannot just overstate how much important it has been that Rohit is a friend. I think it's important for founders to have the emotional maturity to say that if you and I don't agree on something, we're going to have a disagreement. We're going to have a violent disagreement. But once that is over, you remember that both of you are fighting for the same thing. Now, you and I professionally disagree. You think we should do A, B, C. I think we should do X, Y, Z. That's about that. So we have had some of the folks who have seen Rohit and me, having shouting matches at each other, saying, "Ye aisa nahi hoga," and he says, "Aise hi hoga. We should do it like this." And once we decide that that's it, we are done with it. He's Rohit, I'm Amit. We're the same guys that know each other for 30-35 years. We'll go and step out for a beer and it's all good. So I think emotional maturity is extremely important. It is absolutely.
I think emotional maturity and a common goal.
Of course, I mean you shouldn't even be co-founders if you don't have the same thing, exactly same thing. In for example, in our case between Rohit and me, I sometimes tell him, yeah, maybe it is a bit of a problem that we think exactly that it's the same goal that we have to go. Maybe there should actually be a little bit divergence of goal in terms of how you think.
Or maybe the goal can be the same, but the directions could be different, and therefore there is a healthy discussion on alternative paths, because there probably is not one path to any single.
Absolutely. In our case, that happens, and that's where I was saying that we have had a few folks that we knew from our previous lives who worked with us, and they sometimes look at us and say, how do you guys end up having this kind of an argument in which you guys are basically so passionately calling out your points of view or disagreeing with each other's, and then 2 minutes later you guys are sitting telling in each other's ears next thing, and everything is hunky-dory. And I think that's our friendship. That's also emotional maturity. That's important. I mean, but it's what's also true is founders, as founders, you have to reconcile to the idea that eventually, till the company becomes large enough, it's you who will bear the brunt of everything.
Absolutely awesome. So one last question, then we get into some fun part of the where do you see your next 5 years journey at Ensuredit, and what challenges in particular you're seeing and how you're preparing for them?
In the next 5 years, we believe that we will be the largest insurance infrastructure company in the world. The plan is...
As an investor, I could have not heard any better words.
No, I mean, and we see a path to it. We see a path to it. I mean, we believe that in the next 5 years, we could be present in as much as about 60-65 different countries. We're already in about 4 now. This hopefully by end of this year, as in financial year, we should hopefully be in about 10-12 and scale up from there. I mean, even the fundraise that we're doing is essentially growth fundraise, right? Intent is it helps us internationalize, it helps us kind of build out more on the tech stack side. Essentially on the technology side, what we have built is already a great fit for multiple countries. So there is very little that we have to work on. So yes, international expansion, going to multiple markets, being there with large enough players, and we have some of the best logo clients in India, outside as well. So we see that expansion as important. We do want to see our ability to, for example, look at becoming, for example, Lloyd's of London syndicate, so that we can partake in the product creation to a larger extent, expand our margin stack as well. So I think those are 2 key pillars. So strategically, how we kind of call it out is we want to keep on dominating in India. There is no report on this, but I believe that we have about 70% market share in India. We want to keep on dominating in India, keep on expanding. We want to expand internationally, and we have at least 4 or 5 key international strategic partnerships. We want to kind of go a lot more deeper with them. We have landed with them. We want to expand with them to multiple markets, multiple product lines, and areas such as that. AI services, especially focused on insurance, and then combining the adjacencies around it. These are some of the things that we do. So that's where I see we go. I think revenue-wise, we believe that in the next about 3 years' time, we hopefully should hit anywhere between 50 to 60 million. And this is all net revenue lines. Hopefully in 5 years' time, hit about 100 million revenue line. And then from a challenge perspective, I think we want to make sure that we can run it as frugally as we have run it.
I was about to come to that question. Two things. One is you raised money when Indian startup ecosystem was going through a major discovery globally. The world was discovering India as a startup hub. And then for the last 2 years, there has been funding winter is what the term they use. And so therefore, how important it is for the founders to have the ability to, even if they have to dial down a business a little bit, but frugally is the word you said, is to keep the business viable. You can invest in growth, but the business viability should never be in question. How important is that? And then the second part of that challenge is we have started hearing a lot about generative AI and how it is disrupting technology businesses. So those two challenges.
No, I think running a business frugally is a basic minimum requirement, and it's been a part of our DNA in Gym. Even when I was on the corporate side of it, you know how big that business was. I used to run that with about 15. So I've always believed that you want to keep teams small, you want to spend very, very frugally, because that becomes a DNA over a period of time, and then companies start building like that as well. They start making intelligent decisions around it. Otherwise, it's very easy. You raise some capital. It's so easy for people to say, let's go and spend here, let's go and spend there. One of the funny metrics that I give, and it's not necessarily people will argue against saying that no, maybe you should have done something else. I think our spend on marketing in the last 6 years since our inception is less than 1 lakh rupees.
But you're also in B2B.
But I can show you a lot of B2B companies. For example, you go to a GFF and have a counter out there. Never done that. We've piggybacked with a lot of our partners and others, and we'll go there and we'll stand there and we'll try to get access to those clients as well. But it depends. Now at a stage where we've decided now we're going to spend marketing, because we now believe that it has reached a scale at which that marketing becomes important, right? I do the same thing with hiring. You want to hire a really great guy or a girl, and you want to make sure that you give them the independence to build out well, rather than having not spending enough time on hiring, getting a mediocre guy who then needs another 5 people to work with him. Right? So I think being frugal, being intelligent about how you spend investors' money or the money that the company is generating by itself is extremely important. It's something that's ingrained in my head. To your other point that Gen AI will disrupt businesses, I think Gen AI will disrupt certain businesses. Gen AI will also create a lot of businesses.
Yes.
It depends how much are you looking at.
But in particular, your business, how does that get impacted?
I think our business is going to do really great with Gen AI. Actually, I had done coding, for example, 18 years back, 20 years back last year. Ever since some of the Gen AI tools have come, I've been able to code a lot of stuff myself. We have a lot of internal utilities that I wanted that we essentially would end up buying, or I will tell my team to build some of those things. We now, Rohit and I, have this Saturday, Sunday thing in which we decide that there's a utility that we need to build out. Generally, in 2-3 days, we'll build up that utility in entirety. And it has helped us kind of do a lot of stuff that we wanted to do internally. So I think in our business, it will become important. It will help simplify the complex parts of the value chain. Underwriting specifically, right? How do you look at context relevant insurance? How do you look at partner insurance? How can you make it simpler? So we, for example, looking at now, we're doing a project in which with one of our partners who does insurance on motor insurance on used cars.
Mm-hmm.
How do we actually give him or her a much better view of the car's valuation itself at the time of lending?
Got it.
Because we have now an order of magnitude more data points, which we couldn't have assembled minus of help from Gen AI. So I think our business will get massively benefited. It may actually be that kick that it needed to accelerate on the technology adoption.
Awesome. So this is our version of rapid fire. So just say the first thing that comes to your mind. Okay. Tea or coffee?
Tea.
One gadget you cannot live without?
Phone.
What's your guilty pleasure TV show or movie?
Um, not a movie. Lakshya.
Lakshya.
I watched it at least three times a year. 4
Very
times a
nice.
year.
Loved the songs of the
Yeah.
movie also. If you could have dinner with any entrepreneur, dead or alive, who would it be?
Ratan Tata.
Will AI ever replace human insurance agents? Yes or no?
Cat.
Would you rather sell insurance to a cat or explain insurance to a 5-year-old?
Oh, cat.
Do you think, like the West, Indians would start also insuring their electronics?
Yes.
That's the growth of embedded insurance, I believe.
And it's already happened.
It's happening, yes. If you had to eat one meal for the rest of your life, what would it be?
My breakfast, which is basically like 8 different seeds and some yogurt.
Early bird or night owl?
Oh, night owl.
A book, movie, or a show that every entrepreneur should read or watch?
0 to 1.
Excellent. Thank you, Amit. It was a very enriching session. I hope our audience, whoever is watching this show, this podcast, they'll take away some learnings from it that will inspire them, give them the confidence, and for the investors who are listening in, both current perspective, they'll all take away something from it. As next steps, would love it if you can just add a little note on this.
Sure.
Thank you.